Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to bring profits. So you want to manage risk in a way that makes sense to you. And we have some nice tools that assist with risk management within our web trader and mobile app. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, what is fundamental analysis for anyone who's new to things? Basically, it's the news as it relates to whatever it is you're interested in trading on. And so it can be different types of news. A lot of times we're looking at an economic calendar with regularly scheduled events, but there are also other types of news, extraordinary economic events. There was one yesterday leading to today's launch of a number of Bitcoin ETFs in the US. The SEC approved for the first time Bitcoin electronically traded funds, ETFs, to be traded, regulated now in the US for opening up to many investment markets now, hedge funds, etc. So there's a flood of new market territory coming into Bitcoin and the crypto realm potentially from that decision in the US. And that's something that, it was scheduled, but it's not a regular type of event. It's something that only happens once so often. So I would classify it as an extraordinary economic event. And it's something we'll take a look maybe at the cryptos and see what they're doing right now. But so far, it's been pretty bullish in general for the crypto market leading up to the decision and so far after the decision. Kind of a muted response initially with Bitcoin itself, but as we'll see, the overall crypto market's been pretty bullish leading up to and surrounding this decision out of the US with the SEC, which stands for the Securities Exchange Commission. And they kind of make the rules and make sure people are following the rules when it comes to investment products in the US. Now, as we go along, if you have any questions, feel free to post those questions. And keep in mind, the technical analysis goes hand in hand with the fundamental analysis. So as we're looking at the economic calendar or whatever it might be from the fundamental news side, we still take a look at the technicals for entry point, exit point, what's the current trend, the timing of when you might want to first get into a trade, etc. So fundamental analysis doesn't preclude you from also using technical analysis along with it. So where we can start is on our main website. You can log into the web trader from here in the upper right corner, and that allows you to trade on both the MT4 accounts and MT5 accounts, but with advanced functionality that you'll see, like the trade calculation feature in the order window to calculate risk and potential profit, the signals, the market news, the advanced economic calendar that we will use. This is all available when you trade on your accounts through the web trader or the AvaTrade Go mobile app. Whereas if you trade directly from the MetaTrader platform or app, you don't have those advanced functionalities. So you can log in here, and then you'll be in the web trader, which looks like this, and you can get the AvaTrade Go mobile app from your app store on your mobile device, which has the same functionalities that we're about to use. Now, I think a good place to start would be to see what is happening in crypto land, because, and I know not all of you can trade on cryptocurrencies. If you're in the United Kingdom, for example, we can't offer cryptocurrencies to any of the newer UK-based accounts because of the regulatory rules out of the UK. And there are other regions that are like that with cryptocurrencies, but most of the world, most of our clients are able to trade the cryptocurrencies. So we'll take a quick look at that group. And so as we look at the cryptocurrencies, and by the way, there's a larger selection of cryptocurrencies available if you look on our MT5 account as opposed to our MT4. There are some some of what you might call the altcoins, alternative coins, beyond the main ones that everybody knows. But even on the MT4 account, we've got Bitcoin pairings and the Crypto 10 index and Dogecoin and EOS, etc. So a number of cryptocurrencies available on MT4 as well. And I like to look at the Crypto 10 because it's a group of 10 of the highest volume traded cryptos put into an index, okay? And so maybe creates a bit more stability in what is otherwise a pretty volatile market in general, cryptocurrencies, but that's what brings large potential profits too, as long as you manage risk on the potential downside. So if I'm looking at the Crypto 10, which is made up a large part of it by Bitcoin, but also other instruments, you can see exactly what I was talking about leading up to the announcement yesterday, and then today you see really strong bullish movement up on the Crypto 10. You see a pullback. This was the muted response I was talking about as the decision came in, even a small pullback. And then now you see a continued uptrend on the Crypto 10 index, okay? And if we look at the bigger picture, 1 day, 1 week, you see the large run up. This starting here, and I can draw some lines maybe. Let me get rid of some of these old shorter term trading lines that I've drawn in the past. And they kept breaking the resistance levels we were drawing. Okay, so what we can see here then, if I draw a diagonal line, is an uptrend that started back here, okay? And this is back in October. And so we're talking solid 6 months or so of climbing, October, November, December, January, let's say 4 months, but it flattened out back here. The dropping of the cryptos flattened out back here, which started about 6 months ago. If we go back to here where we see the downtrend had ended. So if we go back to July, August, September, we see on the 1 day candles, the crypto market found a support level. And so we can go back 6 months, and then really the last 4 months is where we see the strong rise, okay? And this was leading up to more and more investors realizing that the US was serious about potentially approving through the SEC these spot Bitcoin ETFs, okay? And as that realization came in that might be the case, we saw a bullish move in the crypto market in general and also largely on Bitcoin. And we see that come to fruition now with the SEC approving these ETFs and out of the US, and we see then a strong response currently right now in the last three to 4 days, okay? And you see this is what we call a channel, an uptrend channel, where you see it goes down and back up, down and back up, down and back up, down and now back up, okay? So this is still an uptrend, and it was even a few days ago when it had come down a bit. If you look at the bigger channel, which was upward trending, this back here a few days ago was an opportunistic spot to get in to buy in what was a larger uptrend, a pullback in a larger uptrend, okay? Now we're headed upwards currently. Who knows for how long, right? But some of the estimates for Bitcoin specifically, if you want to look at Bitcoin by itself, you might see something similar to what we're looking at here, and you would see something similar. Bitcoin itself is what could continue to be bought into through these ETFs, okay? Because indeed it is a Bitcoin, about 9 or 10 of them that were approved, spot Bitcoin ETFs. The rest of the market's riding the sentiment, okay? But the direct actual buying demand would be directly on Bitcoin itself for true supply and demand response with the potential price increase. There are estimates that I've read, 100K, 200K per coin. We don't know that that's true, okay? You could do your own reading and research and see if you agree with that. but we see the bullish response thus far to this real world news of the ETFs being approved. Okay, and so then if we go to the smaller candles, you can see it's looking to break today's high right now and really break back above a 2-year high potentially. If we look back here, as we go to say 1-week candles, you see it's broken above this support / resistance level from the past. So we see support, 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 support. It was holding above this price. Here's the crash where it came down. This is where it found a basement. And this is where over the last 6 months, it really found support and came up. And now we see this movement has broken above this old support level. Support, 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 support. It's a price where it doesn't break below, or if it does, it goes right back above. Okay, this is where it broke below that price. Here's where we came up, found resistance for these couple weeks, and now have broken above this old support level. And it looks like if it's going to climb to the next resistance, it would be up in this area here, where we see resistance from the past and resistance from the past here, where it pulled down. So we're talking up around 17,656 on this crypto 10 index before it would reach the 1-week candle resistance, the next one on the chart. So if you were making a move on this and you wanted to go with the perceived positive sentiment, and I'm not saying you have to, you certainly could sell if you wanted to sell, but if we're looking at the fundamental news and saying, okay, that's bullish, that's been for the past months, several months, 4 months, and even a little further back, been a bullish move with this SEC decision and leading up to it, that if you're in the camp that this could continue to climb, and like I said, do your reading. You can do some more reading to make that decision. If that was the case, then your stop loss could be below this support level, risking a lot less, and your take profit with a much further take profit potential up to this resistance level above around 17,600 or so. Okay, so that's an opportunity for those who can trade on cryptos to try and go after that type of move. And I can outline the risk management on that. So if this is a fundamentally based move, also the technicals line up to show you indeed it broke this resistance level, broke above it. That's a breakthrough candle. So from a technical perspective, that's a buy signal when it breaks through a resistance level like that. So you've got a couple things on your checklist maybe that might tell you to buy. We're looking, stop loss could be below 12,000, let's say 11,900 to get back below what should be a support level now. So stop loss, 11,900, okay. Take profit just before the resistance up here, so maybe 17,600. We could even go 17,500 to be further below this resistance. So we don't have to break it to get a take profit. All right. So look at the ratio here. I could lose 3 times on a move like this. If I win once, I'm still an overall profit, even with a 25% success rate. If I try this and it goes down and loses, and then it breaks above that line again, and I try it again, and it goes down and loses, and then it breaks above the line again, that could happen 3 times. As long as I win once out of 4 tries, I would be in profit. Okay, because 3 losses, I'd lose about 9,000. 1 win, I'd be up 16,000. I could even lose 4 times and win once and still be an overall profit. Okay, so this is where the risk management comes in. We've got a direction picked on based on the fundamentals. However you read the fundamentals, I'm simulating that I read it as bullish. Okay, you could read it differently, but my point is the process. Okay, if the fundamentals tell you buy, then makes sense to buy, right? If the technicals show you confirmation of an uptrend, which I see that here, then it also makes sense to make that move. Then the technicals help you decide where you'll put your stop loss, maybe below the support level, and where you'd put a take profit. All right. Then I take a look and I say, what trade size should I have for this setup then? If my stop loss is below the support level, my take profit's up here, maybe I only want to risk 500 on this move. So then I say, or whatever amount that is for you. Now I need to adjust my trade size for this setup in terms of stop loss and take profit and direction. So now I come here and I say, okay, what if I do 0.1? Now I'm risking 893 to make 4,000. I could do 0.05. Now I'm risking just under 500 to make over 2,300. Okay, so that fits my risk management and my technical analysis and fundamental analysis with the move. So then I put the move in action. Okay, I'm risking maybe less than 1% of my account on the move, whatever that is for you. Work out how much do you want to risk per trade, and then the calculation's done for you by the order window on our web trade and on our app. Okay, so the risk management is made very easy once you've done the fundamental analysis and technical analysis to make your move. Okay, any questions on that before we leave the crypto example, and we'll take a look maybe at the economic calendar for some more traditional type news that's coming up today and tomorrow. So I'll pause for a moment. Any questions on the crypto situation? Okay, I don't see any questions popping up for now, so I must have been clear. And any questions that I do see pop up, I'll try to address them as I go along. So maybe we take a look at the economic calendar. And by the way, we can, before we leave the crypto idea, we can use the market buzz if you want to search for recent articles so you can make up your own mind about things. We can look at stocks, cryptocurrencies, standard currencies, commodities, indices, anything we want. Since we're on the crypto talk, we can go here. I can look and see, okay, what's everyone saying about this Bitcoin situation? And this will bring up a news feed dedicated to whatever instrument you chose, okay? Inflation tests market thesis, Bitcoin gets ETF nod. You can read the article, see what are they talking about? This was only 1 hour ago that this came out. Crypto fans cheer Bitcoin's watershed moment. Critics sound alarm. You can get balanced news here. Read the articles by clicking on the link and pulling up the articles and decide for yourself. Here's the technical trend from Trading Central, from professional analysts. They're telling you price may rise 22.2% plus. And they show you the breakdown, the technicals. Where's the resistance level? Up around 57, 56,000. That's what they see. Okay, so this is their prediction. They also show you the pivot line right around 41,500. That if it breaks below there, you might have your stop loss down there maybe. That's where they say if it breaks below there, then something changed with the trend. Okay, so you've got the technical analysis here with the with the signals, the predicted direction. But also you have the fundamental news right here that you can read and see. You didn't need me to tell you about the ETF being approved for spot Bitcoin trading in the US. You can read it right here. There's article after article talking about it. Okay, and if you click on a link, it gives you a synopsis, but it also gives you the whole article if you click the second link. You can read where the source was, where it came from, and read the entire article and make up your own mind whether you think you should buy or sell on an instrument, okay? Because I already read a lot of this news, that's why I'm simulating that, okay, the news seems to be more bullish than bearish. And so that's why we simulated a buy move on the Crypto 10 index. But in the end, you make up that decision for yourself based on reading the news. And it's very simple to read the news for any instrument because it's organized so easily within the Market Buzz feature found right here. Okay, now let's go ahead to the economic calendar rather than just the Market Buzz, and let's look at a different type of trading. Rather than trading off of headlines and recent news articles, we could trade off of data releases. It's another type of fundamental news trading. So if we look at just today, let's go to the 11th. We see upcoming huge announcements out of the US that not just the US is looking at, but the whole world is looking at what will the inflation rate be out of the US. Because this will key investors in as to how soon and how often might the US lower interest rates back down. Because the US raised interest rates like 10, 11 times over the past year and a half, trying to bring down inflation. And lately, inflation's been dropping even faster than expected. So if these inflation numbers come in lower than expected, you could see the market cheer that maybe with the idea that, wow, the US is more likely than to lower interest rates back down if inflation is dropping faster than expected still. And the opposite, if let's say the inflation rates come in with these different inflation numbers, come in higher than expected, then that could create fear that, wow, the US will have to be careful about lowering interest rates back down. And the idea about interest rates is when they're high, it's more expensive to buy things and do things. It's more expensive to get business loans, home loans, car loans, etc. It's more expensive to then expand businesses and hire people. So if these numbers come in higher than expected, and that creates fear that interest rates maybe can't be lowered down then so quickly, that could create maybe bearish momentum on the market, a fear response on the market. That's been the trend lately anyways. But there's no guarantee that will continue, but that's been the trend. And you can confirm that by checking the data, okay? So that's the beauty of this tool. You don't have to just say, well, I think that's been the general trend. You can take a look. And I already looked through these, and the one I found that seems to be the strongest, if I'm remembering correctly, is the inflation rate year over year. And by strongest, I mean the strongest percent data advantage based on the past movements. Okay, so if I look at inflation rate and I say, okay, when the numbers come in, they'll be in this column. This is the forecast column here. This is the last numbers. So last month, the last time these numbers came out, it was 3.1% year over year inflation. It's expected to stay the same, not drop and not go up. Okay, it could come in the same, which then tends to have less of a response on the charts. But if it comes in higher than expected or lower than expected, you tend to have a larger response on the USD pairings, for example. So if we use this tool here, the volatility tool, and I can pick whatever pairing I want with the USD. Maybe I start on GBP USD, and I say 4 hours after the event. I can pick any time frame I want as well within the list. Let's stay on 4 hours for now. If I'm looking at all the events, it's almost 50-50. 58% went up, 42% went down when this announcement comes out. But if I qualify what the results were, meaning if it comes in above forecast, if the inflation rate is higher than expected, what happened in these past announcements? We could see 2/3 of the time the USD strengthened and pulled the pound down, okay, in a large way. We're talking 104 average range pip movement in the 4 hours after the event. I mean, look at these here. Drop after 4 hours of 61 pips or so. This one, 50 pips or so. So after 4 hours to have that kind of movement down, that's huge profit potential. You see the range movement was 104, not just 50 or 60. So that means at some point there was a false movement up before it went down. You know, if you look after 5 minutes, they were all up. So you didn't just have the profit potential of the drop of 50 or 60 pips that we saw. If you placed your trade within the first 5 minutes, there was actually a false move up. And then we see after 4 hours, they were all down further than they were in the first 5 minutes. Even the one that ended up after 4 hours is down from where it was after 5 minutes. So really 100% of them dropped if you got your trade in within those first 5 minutes after seeing that the inflation rate came in above forecast. Okay, so we're talking between 60 and 104 pip potential profit on these moves if you would have sold when the numbers came in above forecast on the year-over-year inflation. And that might make sense in your mind, right? If the inflation rate comes in higher than expected in the US, that means there's larger demand than expected and the USD strengthens, with the idea that they can't lower interest rates just yet, right? If you lower interest rates on a currency, the currency tends to weaken. If there's the thought process that they're less likely to lower interest rates because the inflation is still high, higher than expected, above forecast in this case, then you see the USD strengthened, okay? What about the opposite? What about the ones that came in below forecast? Look at the difference in statistics. This is not random chance. When the data came in below forecast, showing a larger drop in inflation than expected, the USD rapidly weakened. Again, over 100 pip range movement, and look, 83% ended up after 4 hours. And again, this one ended up, what, 180 something pips up, almost 200 pip climb in 4 hours. If we look what happened in the first 5 minutes, they were mostly all up, but this one was only up 80 pips. It ended up 180 pips after 4 hours, right? These were only up 20, 30, 40 pips in the first 5 minutes, but after 4 hours, they're up much more, okay? 85 pips, these two. 200 pips almost here. Okay, the smallest ones were 45, 50 pips. In the first 5 minutes, they were up much less on average. Okay? You're not going to win every time on something like this, right? But once you see the numbers come in, if it's below forecast, let's say, you know what happened in the past most of the time. And the one that didn't go up, the one out of these 6 that did not climb after 4 hours, only dropped a little bit. So the risk side, even the one that went the wrong way from the past, was really small in those first 4 hours. So let's switch to 4 hours. It only dropped a small amount compared to the ones that went up. All the ones that went up double and triple or even more compared to the one that went the wrong way. Okay, so these are strong statistics from the past. Now, the past is no guarantee of what will happen in the future, but this is what we call data-driven trading. And you can have a trading plan each week, pick the announcements that show the strongest statistics in your mind to create the most certainty in your mind, to then watch the announcement, see how it comes in, and be able to trade on hindsight. They always say hindsight's 20/20, meaning, yeah, if I would have only known in advance, then I would have known which way to trade. Well, here you can watch the numbers come in, and the statistics show that you still can trade in those first 5 minutes and have a statistical advantage based on the numbers that you get the benefit of seeing before you trade, right? So you can have a plan that if this comes in below forecast, then I might buy based on depending on my entry point. If this comes in above forecast, I might sell depending on my entry point. The statistics look stronger for a buy, right? If it comes in above forecast, maybe you choose to sit it out. But if it comes in below forecast, the statistics look stronger, that would make sense to buy maybe and take a shot at it. And you're not, like I said, you're not going to win every time when you do this, but if you can win anywhere near these percentages, you're onto something really strong. Okay? If you can even win 60% of the time, or 50% of the time, or even 30% of the time, if your stop loss is much shorter and your take profit is much longer, if that's how you're setting it up based on the past data movements, then you can even profit with 50% accuracy or less. Okay? I see a couple questions came up, so let me address those. Okay, the first question was, where do you get the fundamental news? I think I probably already answered that. It's been a while since you typed that question. So the market buzz we looked at, and now the economic calendar are 2 places to get fundamental news. Next question I'll read through. What will happen to the NASDAQ after the inflation rate news? Will it continue to go up or down? Okay, Good question. First of all, I can't give you a definitive answer for sure because nobody knows for sure, right? But we can talk about past trends. Just like we see past trends in this data when we look at the currencies, okay? I wish this tool would also let you look at other instruments like crude oil, gold, major indices within this tool. But unfortunately, all we can look at are the currency pairings. It doesn't offer anything beyond that to look at the past movements. But I can tell you, just from experience, that if an announcement comes in like the inflation rate that causes positive market sentiment, let's say this data comes in below expectation, not too far below to create fears of recession, but just slightly below the expected 3.1, enough to relieve fears of inflation being too high, right? And so if it comes in a sweet spot where, hey, the USD weakens and the pound goes up like it did 85% of the 80-something% of the time in the past, if that happens again, that basically tells you fear is down, the US dollar is weakening as other currencies are bought against it. Typically that happens with lower fear. So if these numbers come in a way that shows inflation slightly below expectation and fear drops, so USD sells off and the pound goes up against it, typically in that situation, you would see the NASDAQ go up as well against the USD. You might see other commodities go up against the USD because it's a natural response. If the USD is weakening because fear dropped, a lot of times the US dollar strengthens with fear because it's a safe haven currency, and it weakens as people sell off the US dollar and buy other instruments. And so it's not 100% accuracy, right? But there is a correlation, a relationship between the fact that if the US dollar weakens after this data comes in and the pound is going up, you likely could see the NASDAQ, the US 500, and even European indices and Asian indices go up if the announcement creates positive sentiment, okay? In this case, if the inflation rate comes in lower than expected, but not too low, right? You know, if the inflation rate came in at 1%, that might bypass the excitement about inflation coming down and go straight to fear of a recession coming if it dropped too much, right? So there's got to be a sweet spot where the inflation comes in slightly below expectation to create happiness about inflation coming down without creating fear of recession, which is what might happen if this came in too low, right? And the opposite, if it comes in above expectation, you could see the NASDAQ and other major indices have bearish pressure from fear, okay? Okay, Jerome, you're asking a risk management question. When might you exit a trade that's going against you? And in general, the process I walked you through when we placed this crypto 10 trade, okay? We placed this trade just now within this session. Okay, we based it on fundamental news. We looked at the technical analysis. And as I opened the trade, I already took care of that question. You're saying, when should you give up on the trade that's going the wrong way? My answer would be, you should have made that decision before you opened the trade. That's, in my opinion, proper risk management. Don't open the trade and then decide later how you're going to risk manage it. And it sounds like maybe that's where your question is coming from. You've got a trade running and you didn't decide yet before you opened the trade how much you wanted to risk on that trade. And you just kind of let it run, and you're going to use maybe emotions to decide when to get out of it or not. My recommendation would be understand how much you want to risk on that trade before you open it. Use our order window like we did in this session to set up the proper trade size then, so that you know your stop loss price and how much you're risking to that price before you place the trade. Okay? Very good question. And everyone's risk tolerance is different. Some only want to risk 0.5% per trade. Some are willing to risk 2% of their balance per trade. Whatever that is, figure that out in terms of your risk tolerance. And then don't open the trades without having the risk management plan in place before you open. Okay? If you've got a trade running that you did not risk manage, initially, and now you're asking, what should I do? You've got to take a look at your balance. You've got to take a look at how much more are you willing to risk on that trade, and at some point have risk management built into that trade. Okay, otherwise you risk blowing the whole account, which hopefully never happens with anybody who's attending my webinars. But if you're not risk managing in a way that makes sense, you certainly could, on any trade, really harm yourself on one trade. Okay, now we could go to other announcements on the economic calendar. So we looked at one, the US announcement, and you could be ready to trade on the Euro USD or the GBP USD based on what we looked at regarding the inflation rate year over year. And this is the one we looked at, inflation rate year over year. I looked at the core inflation rate, the inflation rate month over month, etc. The data was a little less convincing. To me, the inflation rate year over year looked really solid with that, 67, 2/3% certainty if the data comes in one way, and over 80% certainty if it comes in the other way. I thought this one looked the strongest, but you can look through each one and see, right? If I look at the core inflation rate rather than the year over year inflation, when I look at below forecast selling, I mean, if it comes in below forecast, it's 71% that you should buy. The other one was 80-something%, right? And that's what I mean. Doesn't mean this data is wrong. It also agrees with the same direction. It's just a little less convincing than 83%, which we saw on the other one. But still, it says buy. It's good to confirm that even on the other announcement, if it came in, a certain way, that it also says to trade in the same direction. And if it comes in above forecast, you see what I'm saying here, it's 50-50. Above forecast for the other announcement showed 2/3 that you should sell. Here it shows 50-50, which tells me the market's not responding to these numbers as much as it is being controlled by this one here, inflation rate year over year, which showed a statistical advantage in both directions depending on how this number came in. And you get that effect sometimes when you have announcements that come in at the same time. The one that people are keying off of you can find because it'll show the more convincing data, which in this case, it's this one. Okay. All right, now, tomorrow there are some other announcements that could be interesting to trade on. And unfortunately, the Chinese data, which does move the markets, we don't have the data through the tool to analyze it for the Chinese currency. So unfortunately, we can't look at the China data, but trust me, there will be big movements surrounding these announcements, and you can try to anticipate it. Typically, in general, I can tell you, if the inflation rate data comes in higher than expected, it could create fear of too high of inflation. If it comes in lower than expected, it could create some fear of recession. Okay, but we can't analyze the data, so this is one I probably wouldn't trade off of because I can't use the tool to analyze the data for data-driven trade. You're left guessing a little bit more there. But the GBP announcements, you can analyze. So we can look at the month over month on GDP, for example, which is a large announcement. And the GBP USD pairing, if this comes in above forecast, look at that. 83% certainty from the past that the pound will rise in the 4 hours after the announcement against the USD if the GDP numbers come in higher than expected. If they come in below forecast, it goes up still, but less. So if it comes in below forecast, I don't want to trade because the numbers are not as strong. But if it comes in above forecast, look at the certainty level from the past. Look at the amount of green above compared to the amount of red below after 4 hours. And again, you can say in the first 5 minutes, does it go that full 55 pip range movement? No. 14 pip range movement in the first 5 minutes. So you have time to trade in the few minutes after you already see the numbers, and still most of the movement hasn't occurred yet. 14 pip range movement in 5 minutes, plenty of time to place your trade. And then after 4 hours, over 54 pip range movement. Okay, so there's some announcements you can look at for tomorrow as well, including the GDP numbers out of Great Britain, and you can also look at the PPI data out of the US. Okay, those are also high-level announcements that tend to cause big movements. Okay, so very powerful information here that you can use the tools that we offer to have a plan to trade. And we only covered 2 different strategies here, but they're powerful strategies. One, reading articles in the market buzz and trading off of that type of fundamental news. An example is what happened yesterday with the SEC and Bitcoin ETFs. And then another strategy is using the economic calendar. I see another question. Just give me a moment to read it. Okay, so yeah, correct. If you are risk managing with a stop loss and it goes down, hits your stop loss and knocks you out of the trade, you have to be paying attention, because if you then want to put maybe a pending order back above that broken support level so that if it continues the uptrend, you'll get back in on the move, right? Because if it hits the stop loss, you're out. And then if it reverses back the right way again, you're not in on the move anymore. So the negative part of a stop loss is that it can knock you out of trades that eventually go the right way. And that's why you have to pay attention and decide if you want to re-enter then if it starts to go the right way, if indeed you are using a stop loss and you get knocked out of the trade, okay? And so the easy way to do that is, if you see that you got knocked out of the trade, is to put a pending order back above a certain price that would convince you that that's an uptrend again, and then you get back in. Okay, that's one way to do it anyway. It's not the only way. So some of the questions I'm seeing about if the inflation rate is high, what direction do you think things will go, or if it's low, we just looked at the data on the economic calendar to answer that question, right? I think we talked a bit about the tendencies on maybe the NASDAQ and major indices as well. Okay. All right, everybody, thank you for joining. We've been going for a good 45 minutes or so almost. Anyways, I think this is a good place to stop. Thank you for attending, and good luck with your trading. I think you'll see a lot of nice movements today, not just on the cryptos, but also on the major indices, the USD pairings, maybe with the CPI data coming in. So try and take advantage of it. Find the entry points that you like, and maybe use some of the strategy concepts that we just went over with the data-driven trading and the fundamental news out of the market buzz. All right, everybody, thank you for joining. Good luck. Bye for now.